Hello, Face, Ziggy, Windsor, everybody. Patrick, how are you? Here's a look from Grega in the pound, almost up there. I talked about it yesterday. Talked about a third drive. Said be careful up here. If the RSI confirms, it did. So we now have a throwover. Grega looking for about 30.80 to 31, so could be some more upside left here. Also yesterday talked about the S&P selling off to 245-ish, right in here. Manifested. Believe that there's a good shot for new highs, which makes me think you want to be long the yen crosses, euro yen. Got down to Grega's level, the level I talked about last week, 29.40. That was a level for Nick too, 29.50. So we could be on our way up there. Aussie yen also looks pretty good to me. Guppy looks okay to me. So if we're going to get a stock market rally to new highs, yen crosses should do okay. Here's Aussie yen. Just a consolidation. Only two drives, so maybe we get one more big push up towards 88. Hi, V, how are you? Okay, you were long and sold it up there? Okay. So I think risk is on here. I prefer the short in the euro. I'm not sure we're there yet. Wait for an ECB statement. Still, this could be one A, B, C, D, E for B, and we get a C to the downside. Still think that's possible. And try and be a little more patient about a short in the yen. Okay, we're beginning to diverge. Confirmed high here, diverged here, first divergence under 80 here. So that's in my, it's on my radar. Hi, Glenn. Kiwi long, the more hated commodity currency. It's probably due to squeeze people here. Yeah, it looks okay. I remember Steve showed the Head and Shoulders breakdown that was negated. This kind of looks like a flag to me. So maybe you risk close under 190 here, 180. Looking for this double top to be taken out, 210, 260. Yeah, we'll give you 310. Good luck, but manage risk. Okay, good luck, B. Any other questions for me? I think we have a full staff today. Everyone doing pretty good? Hi, Windsor. Stuart, Steve, Stan, Simon, Scott, how are you? Ash, how are you doing? Ron, Robert, Ride the Curve, Ray Forgy, you have your hand up? The question? Patricia, hi, Ron. Milton, nice to meet you. Hi, Morrow. Hello, Lorraine, Lorena, Laura. Gold, Joe? Yeah, you know, I was looking at the metals here, and especially the silver, but then I looked at FA analysis, and it's got higher levels. But, you know, it's starting to diverge here. Here's a picture. So maybe we get to 1810 up here. That would be a wedge line. And the gold is beginning to diverge, but I've seen 1370. 1, 2, 3. See what this gives us. Starting to lose momentum. Does that help? Anything else? Yeah, Luca. Luca called that yesterday. Pound Kiwi, beautiful call. So it's here on the 1 day. Right here. Held it yesterday, putting in a good candle. Measured, it's pretty big. Looks good. Okay. Good eye, James. Guppy? You know, while I'm still a bit negative euro pound, it's almost like the euro yen would be my preferred. I mean, it's a big range. Here's a picture. Big triangle, almost looks like a symmetrical triangle. Unless I do this, maybe it is. Check a back test there. Otherwise, you know, maybe you have a triangle here. Something like this. Almost an ascending triangle. Neutral. 4 hour. I think it wants its gap right here. And the 200. Maybe up around 140, 280. Does that help you? Get through there. I think we have 44. Now, if I'm right, and the S&Ps have one more hurrah left, you would think yen crosses are going to be doing okay in that environment, right? So, you know, there are counts, and Greg had talked about it last week, and I know Blake wants to talk. I'm going to let him in, but last Friday, Greg, a quote, "I don't chase rallies, looking to buy a break in DAX. We got a break in DAX, got a break in S&Ps, then looking for a rally." So I'm on that page. Hi, Blake. How are you, buddy?
Hey, Dale. How's it going?
Good, good, man. How about you?
Good. You know, I'm really just waiting for, you know, the Bank of Canada today. That's like the big that's the big hoopla today, and really is what I'm waiting for. I mean, you know, yesterday we got a good amount of volatility. Somebody had mentioned the pound New Zealand, and you know, I feel I'm still long the pound New Zealand, and actually I sold some of it just a little while ago at 180.90 personally. But if you use ForexAnalytix, you know, yesterday I did it, alerted people.
Okay.
Personally.
Breakout. Yeah.
No. It wasn't a breakout. It was
Oh.
it was respecting this uptrend line. We had this
Okay.
nice hammer here, but we hit this trend line, and yesterday, said a strong reaction from trendline support for the pound New Zealand after flushing stops below 180 level, which could lead to a bounce. And
Good call.
yeah, obviously right now we're close. Well, we rallied all the way up to 181, and I sold some this morning, but I am still bullish. I mean, overall, I'm looking for a move up towards 184, 185. So, but I did sell some of it this morning just to lighten up my my position, and I can reestablish that. And I'm trading that cross pretty aggressively. I'm also trading the euro pound. The euro pound did such a, I mean, this is like the ultimate screw job for everybody yesterday. And if you're watching like the 4th of September, so when we're on on a holiday here in the U.S., it says the euro pound is testing the underside of broken trend line. So that would be right.
That yesterday.
Yeah, it had been right here, testing the underside of the broken trend line. I established a pip as a result. It says. This move higher is due mostly to the UK construction PMI and the risk off over the weekend, but the underside of the trend line should hold for new shorts. So, if you shorted up there, we slumped to new trend lows yesterday, and here's the euro pound. We hit that underside of that trend line here, and then we slumped to new trend lows. Now, because we hit new trend lows, it to me, it looks like the euro pound is on its way to 91. And if you look, and that's 91 pence. And if you look at the flag pattern that we had here, it looks something like this. Okay, this flag pattern, and actually I drew that kind of screwed up, but I can have to do something like this. That flag pattern actually points to 91 pence anyway. So you can see that we should make it down there in this leg lower eventually. So I'm not worried about the euro pound. I still think it's and really it's like we have this trend line, this support. We have a 38% retracement that comes in at 91. We have trendline support comes in at 90.50. I think those are all doable and achievable targets for the euro pound. And if you look at the pound dollar, and you had mentioned Greg is looking for another leg up towards 130.80. The euro pound, or excuse me, the euro pound, the pound dollar has this inverted head and shoulder pattern. I hate, and I have to mention this personally. I hate head and shoulder patterns that tilt in the direction of the trend. I like them going counter trend. So in other words, if an inverted head and shoulder pattern looked like this, and that looks like a dong actually is what that looks like. But anyway, but if it looked more like that, those are easier to achieve. Those are easier to achieve than these. But regardless, it is what it is. It's still trying to work itself higher. So that's the pound. But what I'm really, like I said, what I'm really looking forward to is the Bank of Canada. I do have.
You have a chip working on that, huh, buddy?
I do. I have to take you over to the weekly chart, and this is the weekly chart of the U.S. dollar Canadian. So, as you guys know, we are on a multi-year trend line here. This is a weekly chart, and as I explained previously, if we break below this trend line, we are going lower. I mean, we are going to get absolutely destroyed in the dollar Canadian, and that you have to have awareness of that. And I'm aware that the Bank of Canada could be extremely hawkish. They could do a hike. They can have a hike and a hawkish hike at that, and then you have crude oil that's rallying. The dollar Canadian could really come under some pressure. I mean, it really could.
Wasn't that a macro target a long time ago on FA 116?
I don't recall. You'd have to ask Stelios, and Stelios is not going to be here today.
Oh, yeah.
So I'm not 100% sure. I don't remember that, but
Okay.
breaking down is a possibility. Even though I'm long, I think the risk reward is to be on the long side, but I'm not ignorant to the fact that we could break down, you know, and you have to be, you know, you have to get yourself out of this position, you know, in my opinion, if it breaks lower. I mean, that's the bottom line. Now, here, let me move this really quick.
You have some nice divergence there. Later.
What's that?
You have some nice divergence there.
Oh no, and you know, if you take in like the DSI here, let me grab it for you guys really quick. I don't pull the DSI up for you guys every single day, but I'm gonna pull this up if I can find it. Here it is, and let me grab it. Give me 1 second. All right, so let me see if I can draw on this here. Okay, so here's the Canadian DSI. It's at 87. That's very strong and abnormally strong. Okay, so with that being said, if the Canadian, okay, so I don't think the Bank of Canada actually moves on rates today. And if they don't move on rates today, it'll probably be a, you know, they're going to hold but stay hawkish. If they hike, they're probably not going to be hawkish. They probably want to try to contain the Canadian dollar strength, because the Canadian dollar has been strong. I mean, and you can see the DSI, the sentiment is very, very bullish right now. So, and at extremes. So I doubt they're going to do a hawkish hike. If they do a hawkish hike, then we are going to break below the support. I mean, there's just no if and or buts about it. And I would be, you know, I'm going to get stopped out and then have to really start trading the Canadian on the long side against everything. I mean, I'll short the Aussie Canadian, New Zealand Canadian, go long Canadian yen. I mean, you name it. I'm going to be pretty bullish the Canadian dollar if we break through here. I'm just trying to play a turn. Now, if the Bank of Canada does not hike today, if they don't, but they still have a, you know, hawkish, you know, press conference, that still might be a catalyst to reverse. So meaning that the Canadian could weaken. Where I'm going to get really bullish is above here, above 124.40. This is like, and you can see on FA, on ForexAnalytix, you can see right here, this is the resistance, and that is a key level of resistance at the moment. And you can see the bull bear line is at 123.25, because hey, as long as we're above 123.25, we can play it to the long side. We get below 123.25 and things are going to get a little gnarly. You know, we could really break down. And like I said, I'm not married to that idea. I hope we go higher. I think we're going to go higher. I'm long already, and I bought it last week. I bought last week when we were down here at 123 like 65 or 70 is when I bought it, and I still own it. And even if you look at the intraday charts, let me go over to like a 1 hour. You go into the intraday charts. Yesterday we broke into new trend lows, and if you use ForexAnalytix, you got this information as it was happening. You can see right here, the 1 hour chart. We broke to new lows and we bounced, and we wrote the U.S. dollar Canadian is almost back at 124 following the intraday bounce. Okay, U.S. dollar Canadian hit a new low from Friday, but it was brief, which makes it a false break. Also keep in mind the major multi-year trend line down here, which could allow for a bounce back to 124 ahead of tomorrow's BOC decision. This was tomorrow. This is yesterday. And where are we right now? We went back to 124. I mean, today's highs are, 123.99. So we did it, which, made complete sense. And if you were using ForexAnalytix, you were not suckered into this trade down here, shorting. But we have to get above 124.40 in order for this to turn bullish. We really do. And if we get above 124, I am going to be long. I mean, I'm going to be long a little bit more because, as I explained to you guys, the Canadian DSI is strong, but too strong. It now becomes more of a counter trend. A contrarian type of indicator. Also, if you look at the dollar index right here, the dollar index is at 11. That is extremely bearish sentiment, almost too bearish. So, the risk of a dollar bounce and Canadian selling is quite high when you combine the two, between those two things. That's why for me, I don't mind being long the dollar Canadian. I just want to be long more if it actually shows its hand. And obviously it's going to happen in an hour and a half, and trying to anticipate that. The only reason why I'm taking a position down here is I've got the flexibility to do so because I've had a decent quarter. If I had a bad quarter, if I'm down money for this quarter, because I measure myself by quarters. You guys might measure yourself on a monthly basis or an annual basis or maybe a weekly basis. I get paid on a quarterly basis in my
What's
trading.
a good quarter for you, Blake?
Percentage-wise?
Yeah.
I don't talk percentages.
All right. Okay.
But
anyway, congratulations.
It's enough for me to live.
All right.
My lifestyle. Does that make sense?
Congratulations on a good quarter.
Thank you. I've had a good quarter, or it's decent anyway. If I was down this quarter and my quarter ends in a month, I might be a little bit more hesitant about taking a position. So, a lot of what I do is really factored on how I'm trading. And like I said, some of you trade on a different, like if you trade for yourself and you're like, okay, you might measure yourself on a weekly basis. Like I had a good week this week, so it's towards the end of the week, so I'm willing to take on a little bit more risk. For those of us that live off the markets, we have some sort of measurement which allows us, based on our trading, if we can take on certain risks. And right now I can take on this risk. If you want to trade it a safer route, you buy it back above this resistance. Then for a fact that it is reversing, or at least I say for a fact, you have probably the most confidence you can possibly have in the markets by doing that. There's no guarantees, but at least if you break above that resistance, you're putting yourself in a position where it's a high probability that it's going to really start to take off to the upside, if that makes any sense.
Yeah, Steve does that. He waits for confirmation a lot, I've noticed.
Oh yeah, he's very conservative in the way he trades, and it's great. Yeah, it's one of those things that if you are a conservative type of trader, you might miss more opportunities, but you probably your consistency is going to be higher.
Yeah.
Right.
Yeah.
Okay. So anyway, and like I said, all bets are off if we close below like 123 today. If we close below 123, you have to realize that the Canadian is going to get really strong against a lot of currencies, and so that's when you have to start looking at, like, in my opinion, like this New Zealand Canadian has already showed a false breakout a long time ago, but this New Zealand Canadian, this is one of those that if the dollar Canadian actually breaks lower, then this one is toast. Like if the dollar Canadian breaks through 123, this thing is going so much lower, in my opinion. Okay, that's what I would be thinking. But right now you got to wait for the Canadian to show its hands. And today, that's the big thing today. I mean, today is, for me, it's really gonna, it's more or less gonna make or break my week. Is the Canadian, and what happens today, and that happens in an hour from now. So pretty important. Let me see what else I want to cover. The U.S. dollar Mexican peso is probably one of those that will hold up, especially if the Canadian breaks higher. This U.S. dollar Mexican peso has held outside of this down channel, and I'm waiting desperately for this move right here. And I'm hoping it comes. It may never come. You know, I might just sit here and wait, and you know, it eventually just breaks down. I mean, you know, maybe crude oil rallies to $55 a barrel, and you know, the Mexican peso and crude oil, you know, have that correlation again. That's entirely possible, and then it breaks down. But if we break above 18, that's when, you know, I'm expecting a really big squeeze. Now remember, there's ongoing NAFTA headlines, and we're through.
How many rounds are they having, buddy? You know how many rounds? They've had 2, 3, one more round, huh? Okay.
Right, 3. Sorry, my nose is, I'm getting into allergy season right now because I have horrible allergies, and so I get them when we get a change of weather. Seasons. Well, yeah, for us, we have 2 seasons. We have summer and spring. That's all we have really here in Phoenix. We have spring for we have spring for 8 months and summer for 4 or 5. Yeah. And so the problem is that
Blake,
when
summer and hell, most probably you mean the 2 seasons.
No, I mean in the winter time, it's, you know, we could, I mean, it gets down to 70.
It's beautiful there in the winter. It's just like San Diego in the winter.
It's I would say it's even more beautiful than San Diego because the sun is shining all the time. But anyway, and I love San Diego, by the way. But anyway. My allergies get bad this time of year, which I'm happy about because I know it's gonna be cooling off soon. So it's
well,
okay.
That's why you're getting the headaches, Blake. They're sinus headaches.
It could be. But anyway, I'm looking at this U.S. dollar Mexican peso. I think this could be a big reversal. You know, it's something I'm paying close attention to. I have some bids to buy the Aussie New Zealand. I had been expecting a move down here to the 110.25 level. You know, it's funny is I have my bid in at 110.25 or 110.20. Well, let me see where I've been moving it a lot. I have a bid at 110.25 and 0.6 of a pip. I've had that bid in there for like the last several days, and you could see the lows. The low here is 110.25 and 0.2 of a pip, but that's on their data feed, not JP Morgan. So obviously my bids never got filled, and I'm so irritated that I've been sitting here trying to buy it down here, and it, you know, I've gotten rejected thus far. But I still think the Aussie New Zealand is very bullish. I still want to be bullish, and I think it goes up to 114. But I'm just not getting filled on any of my orders, which is irritating as all get out. But you know, I know you guys are probably, you know, curious about the euro. The euro is still very strong. We're at a 50% retracement right now, kind of nudging our head up against a 50% retracement. Like I said, the pound still looks pretty good, bullish wise. Somebody asked about the Kiwi going to 73 cents. Remember, we have a head and shoulder pattern here. We had a little bit of a break of this neckline and then, you know, bounce back up again, but it still hasn't been invalidated. I would venture to guess that the Kiwis, the rally from yesterday, and I sold it yesterday, short, or actually I take this back. I actually lost some money shorting the Kiwi. My cost average I think was 72.20, like 20 20, 22 or something like that. And I shorted some at like 85 down here, and then I shorted some more up at 50, and I got out at like 30. So I lost just a little bit of money, which, you know, I was happy at that moment in time. I'm like, okay, I took a small loss. But overall, I mean, I think the Kiwi actually looks like it's going to continue to roll over. But anyway, that's it for me, Steve. You know, hearing your voice, I know that you're here, and you got plenty of other cross rates that you can discuss this morning before the open.
Hey Blake, before you go though, I just want to let you know that I had a good quarter this year, but I used it in a vending machine.
Oh my God, your humor! We got to do something about that. I'm gonna have to exchange that in. I'm gonna have to run to Amazon and buy you some new humor when we get a chance.
All right.
All right.
I read joke books. Okay.
Yeah, man, I tell you, you got some outdated ones out there, Dale.
Well, you know, I'm 80 years old. Come on, you know? I'm 80.
All right, Dale. All right, Steve. Thanks for you guys' time this morning. Hope you guys have a great trading session and watch the Bank of Canada in about an hour and a half from now. So, Steve, I'll pass it over to you.
Okay, mate.
All right.
Good luck there.
Thanks, Steve, and thanks, Dale. Have a good one.
You're welcome, man.
Okay, let's have a look.
Steve, didn't you think that was funny at all? That I had a good quarter and I used it in a vending machine?
That was honestly a good one.
All right. Blake didn't like it. Okay. BW liked it. All right, go ahead.
Okay, so first of all, you mentioned about the indices before, and you know, I want to show something here. We had already discussed about it. Let's go to a 4-hour chart of the S&P. Okay, and we had said, you know, Greg did the same. We talked about a clean ABC pattern here, a channeled one, and then we got a breakout of the channel. But what I wanted to stress out is that even this move lower that we had is also an ABC, right?
Even with the gap, right? The gap doesn't change.
Yeah. No. The gap doesn't change wave count. It doesn't change wave counts in any way. So it still looks bullish. I mean, you know, if this move lower, especially, you know, surpasses this level, which is like 2,471, it confirms that this was, you know, it totally confirms that this was an ABC. So, you know, we you know, from a technical perspective, we have no reason not to expect new highs. Okay, we said that, you know, some time ago as well. We said that both the S&P and the Nasdaq were showing very clean corrective patterns. And you also mentioned the DAX, which is, by the way, I want to mention this because it's quite important. The Euro USD is higher on the day, not a lot, it's like 0.2% higher, but still the DAX is 1.1% higher as well. Okay, yeah. And it is, yesterday it got rejected, but it seems that it will be breaking above the channel today. So, you know, the DAX looks constructive as well. I mean, this was a very nice, well-behaved corrective move lower after a very strong uptrend. There is, you know, it's undeniable that this was an impulse, and for the time being, we have absolutely no reason not to treat this as a correction. Okay. So I remain constructive on the indices on the short term because, you know, this is a short-term view because I still believe that, you know, in the long term, you know, valuations are stupidly high up here, and, you know, we're going lower, but, you know, that doesn't mean it's going to happen today, tomorrow, or next week.
You know what was important is yesterday we identified the zone to buy the S&P.
Yes.
At 45, 46 within a handle.
Yes,
so,
yes, that was a very good call. Yes. Now that we had a brief, look at the indices, let's have a look at the USD yen as well. Okay, the USD yen is still, you know, struggling in this general area that's, let's say, between this low we had at 108.10 and 108.80, let's call it. You know, we've made several attempts to close lower. Every single time this thing gets bid, I mean, it almost feels like artificial, because from a technical perspective, this chart looks really bad. I mean, USD yen looks very heavy here, and it looked, since we were here, that it wanted to, you know, to push lower to 106 support, but you know, one way or another, it still receives a bid and, you know, stays above these lows. You know, irrespectively of if it's a day that indices are moving higher or indices are moving lower, more or less it's staying weak. And you know something, the more it fails to, you know, to show some strength, obviously the higher the chances that we're going to go to 106. I have absolutely no doubt that as stocks are, same deal happens with USD yen. More or less, part of the bid is artificial. You know, central banks, etc., etc., etc. So, if that wasn't the case, I would be like, you know, 1,000% sure that 106 is going to be tested, you know, sooner rather than later. But being USD yen and seeing a clear effort here, you know, to support this market, you never know. But definitely, we have no signal to be long at the moment. Okay, so you know, we will need to see a move above 111 to consider something that might even produce some kind of a bullish interpretation. Okay, until then, you know, I remain cautiously bearish, and the cautious goes to the part that I told you, that this is more or less a, you know, heavily manipulated market. Okay, let me go through some questions, and then, you know, questions bring ideas. USD CAD was covered. Yeah, Arif is mentioning that. It was covered by Blake extensively. Hi Blake, may I ask if that report is free? No, it's not free, Martin. The DSI report, we're paying for it. Actually, it's not free. Nitis is saying that there is no press conference today. Okay. EU stocks may sign after this 10% correction. I agree with that, Luca. That's exactly what we saw in the DAX as well. You also have a chart. Let's have a look at it. Since we talked about the stocks, there we go.
Yeah.
Okay, this is the CAC 40. Yeah, this is the French index. And it's also well behaved and well channeled, and I see that it found support also on, you could interpret this as a triangle, with this being the resistance and this being the support. So it found support back here. Okay, yeah, this is a good view. And regardless, as you see, this corrective move here resembles very much the one we saw in the DAX, which is like a channeled overlapping, well-behaved drift lower. So yeah, I totally agree with you. The CAC looks as good as the DAX does. Good view, thank you, because I haven't had the look at the CAC in quite a long time.
Just stay bullish.
Yeah, you are also pointing to you're talking about a bull flag on the DAX. I'm not going to show that chart because I also view it as a bull flag. So we already saw that. I totally agree with you. Is DAX front running the ECB? Simon says heading up. Okay, that sounded like a joke. Simon says is DAX front running the ECB heading up way more than other equities? Okay, Simon, front running the ECB in what kind of way, mate? I mean, obviously you're implying that perhaps the ECB is going to be dovish, and perhaps the DAX is front running the fact that we might see some euro weakness, right? I'm guessing that's what you imply, because usually they are inversely correlated. That might be the case. You know, there is a lot of speculation that the ECB, one way or another, will respond to the recent euro strength by throwing something to the market that the market can actually, consider as a, as a strong signal that perhaps they're going to move forward down the future, expectations of tightening, or so that they're willing to tighten like a lot slower than the market might be expecting, etc. So they can tame the euro strength. But we have to wait and see for that, because for the time being, except if you remember, we had like some days ago, it was I think last week, we had some the usual chit chat, which is like ECB sources say that the euro strength, blah 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 blah. But these kind of statements like ECB sources say, usually that doesn't tell me much. I mean, we still haven't heard somebody officially from the ECB seriously trying to talk down the euro. So until that happens, I remain a little bit skeptical. Okay, let's see. Blake from SI 124.27 says, what's that? What's 124.27? I'm guessing the CAD. It was probably there before. Closer look at DAX on a daily chart, 200 MA supporting, bull flag being tested. Yes, look, I agree. The reversal will be USD CAD decade high on monthly. So this is okay. Okay, got it, Ronit. Amazing DAX up 50% from pre-2008 crisis highs, CAC down 20% from same period. I'm ultra bullish French stocks. The Macron trade. Okay, look, I agree with you. If Macron proves to be the market expects that Macron is going to be more right-leaning, having to do with economic policy, than obviously Hollande, which was a socialist. So yes, if Macron proves that he's more of a neoliberal or anyhow a liberal to the economy, that's definitely going to improve France. The French economy and hence the stock markets. There are a lot of people that don't know or don't realize that, but the French economy, despite its size, suffers quite a lot from French people's ideology being, they're leaning a lot to the left, and the French economy, the labor market, etc. They're quite a lot non-liberal, and that definitely holds the French economy down. So if Macron can help the French economy get rid of some of the obstacles that were putting a brake to the French recovery, yes, I totally agree with you that will prove to be a very good catalyst. Can say euro is strong. 119.6 is key area. Above that, it rips higher. True. Copper is the best trade around. Yes. Okay. Let's have a look at copper, because I was having a look at it yesterday at the close, and we also talked about it. Listen, copper. We've already said copper is very strong. Copper is on another impulsive move higher. There is no question about that. But copper has already hit the channel resistance, and actually it produced yesterday an outside black candle. Okay, so this is a bearish signal in the short term, and this might be pointing to the beginning of a correction lower. As I said yesterday as well, I would love to see copper move lower, and might be a good buy. Obviously, buying it up here doesn't make any sense. So let's see what kind of follow-through we're going to have to yesterday's candle, because that might initiate a move lower. Today's candle so far is an inside day to yesterday, so doesn't give us much to work with. But if I see another bearish candle, I'm going to be interested here, okay, about copper. Extreme bullishness and Aussie, yeah, I agreed with that, and we've also talked about it yesterday. We are seeing, a black candle today, but still it's an inside day. I still believe that the Aussie USD can register one more high before actually moving lower. So I do remain bullish the Aussie USD. I mean, it has held so nicely, even through the event risk and North Korean news, etc., etc., etc. So I do think that it might move to new highs. Steve, what if there is a conflict with North Korea next week? Equity sell-off? Depends, Arif. Depends. What kind of, the market? I mean, I follow a guy that's that's very good, and he has a nice sense of humor as well on Twitter. He's called GreekFire23. From what I understand, he's Greek, but he lives in the US, or he's American Greek or something like that. So, when we had again North Korean news during the weekend, he said, North Korea, the gift that keeps on giving, 15 handles down, 30 handles up. And that's exactly what happened once again, because you know something, we get a headline, we get a little pullback, but then if nothing happens and there is no follow through, the market just becomes numb to these kind of news. So, the initial little sell-off is being treated by the markets like, oh, okay, this is a nice, buy the dip opportunity. And then we get another move higher. So depends. If it's all, on the level of news, etc., I wouldn't be worried at all. Now, if we really see some kind of a conflict, obviously the initial reaction is going to be lower. But believe it or not, I strongly believe that North Korea is absolutely incapable of hurting the US directly in any kind of way. So even if we see a stronger sell-off just because there is some kind of a conflict starting with North Korea, I would be very skeptical that that would be the catalyst for this market to completely reverse and start moving lower. So I think there would still be people buying the dip, and for a good reason, because North Korea cannot directly damage the US. I honestly believe that the US can annihilate North Korea within a few days. And when I say annihilate, the US does not have borders or anything else with North Korea. You don't need to send the military there. The only thing the US needs to do is destroy any kind of infrastructure they have that has to do with nuclear weapons or whatever. Okay, of course I know it's the debate about US's responsibility to defend South Korea, and North Korea can then directly do some South Korea. That's a totally different story, but still I don't see that hurting the US economy one way or another. Actually, I can think of a lot of stocks that are going to get bid. So yeah, the initial reaction is going to be lower for sure, but I'm not sure about any follow through in that case as well. Yeah, for years Draghi has been bullish the DAX, says Simon. Yeah, one way or another. Could you please comment on the Euro Kiwi for short? Thanks. Yes, Dimitri, I'm going to do that. Gold silver ratio, when you look at the metals, we can do that as well. Aussie USD, we already had that. Communists, lol. No, if that comment refers to my comments about the French, no, they're not communists, they're socialists actually. I know that socialism is like a little cousin of communism, but it's not exactly the same deal. But it all has to do with the fact that French, what's the English word button again? You see, in the 18th century, French had the whole, revolution of ideas, etc., about human rights, etc., 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 which was a good thing. But generally, that has made French people a lot more sensitive with, ideas that resemble the theoretical basis of socialism. I repeat, the theoretical basis of socialism, because socialism actually, will destroy any kind of economy you're actually trying to apply it to. Overregulated French economy, exactly, Arif. Copper, we had a look at it. Okay, let's go through the Euro Kiwi then, since we talked about it, and the gold silver ratio. Okay. Okay, yesterday's candle was very promising, about the potential for a move lower. But what's not promising at all is the fact that we have been holding this ascending channel. So, depends on how we close today. That may even photograph another push higher to the 161.8 before then providing an opportunity to be short. I'm still short this. And I have to tell you that I'm going to hold. I've now actually put a stop loss after yesterday's move, just above this high, because yesterday for me was a confirmation that, you know, we finally get some strong reaction from the bears. So after this kind of candle that we got yesterday, you want to see follow through, because if you don't see follow through, then I don't want to be involved anymore. So now I actually have a stop loss for this. It's at 166.75. I put it. So, you know, I might get stopped out. So, you know, this was the first bullet. I'm willing to sort it again higher if I see some kind of a failure, but, you know, for the time being, it remains strong. You know,
Steve, we've been talking CAD yen for several days, and we've had a nice pullback. Looks like it could be a decent buy for a move to the 90 handle. I'm wondering what you think.
I'll tell you immediately. We are definitely retesting this once again. I'm telling you, this move higher here, you know, it made me a lot of skeptical to the downside. So, yeah, I think it can easily be heading to new highs. I mean, higher probability than moving lower to, you know, the initial reaction after this move. I was expecting like a, you know, this pennant to lead to 84.60. But now the higher probability scenario is a move to new highs. There is no question about it. Especially as long as we stay, I would say 87.30.
Yeah.
I think above 87.30, you know, you need to remain bullish. That's my opinion.
Thank you, buddy.
Oh, my pleasure.
Thank you. Maybe I could have another good quarter.
Let's have a look at the gold silver ratio that you're talking about. Okay, this is the gold silver ratio. Okay, it's obvious that after we got that stupidity spike, it was the stupidity spike, if you remember, of silver, that insane sell-off we had that day. Let's have a look at it. So it's okay. Yeah, I really think that gold silver ratio, you know, is going to be, you know, a lot positive for silver as long as we get a break below this. I had this chart drawn on another tab, as it seems, because I had drawn the chart. That's why I remade it now. So this is what I'm monitoring in the gold silver chart. So I think a break below this ascending trend line, you know, is going to be obviously starting like a period of overperformance of silver. So that's what I'm monitoring here. I don't know if you had another question about the gold silver ratio, but you know, that's my take of it. Could you, Steve, look at the when you look at the metals? Thanks. Over again, yeah, we say copper. Steve, what's your Twitter handle? Yeah, it's at Vulgi. Let me write it. There you go. I just put it in the chat. Yeah, good point. Renaissance, yes, that's a word. Thank you. Good wine makes you less likely to go to work your ass off at 7 a.m. That's a good point. Would you see EuroCAD? Of course. Let's have a look at EuroCAD. Who do we have today for an interview, by the way, Dale?
Chris Irons of QTR Research. Both the Raven, it stands for.
Okay, EuroCAD.
The Raven Nevermore.
Okay, let me tell you about EuroCAD. I still think it has the potential of moving lower towards here. I really don't think that this move here that we see, I mean, it has a potential of being a, you know, something we're going to know pretty soon, but I can tell you one thing for sure. Right now, the chances are higher for a move towards this support. This can end up being an irregular, like for a new move higher, it can be. So I don't have such a clear bias from a technical perspective. But honestly, what remains a fact is that for me, and they had drawn it since back then, 150 here, this zone is extremely important. We failed to penetrate it 3 times here, and this is what caused us to move lower. So one way or another, I cannot be bullish this unless we break above there. Okay. So, you know, as long as we stay weak, I believe that 143.25, this zone will be tested. And, you know, in order for me to believe that this is something else, I need to see a break above 150. A break above 150, on the other hand, is probably going to lead to new highs. So, you know, we have this zone here in the middle that it's more or less no man's land. Like, you know, I can't be bearish or bullish too much here. Okay. Definitely I'm going to be bullish above 150, and definitely seeing the weakness that we had these couple of 2 candles here, especially since I can interpret this as a corrective move higher. You know, I'm tilted to be bearish, but you know, it's not a thing I would take a trade on at the moment. DXY, yeah. Eurozone, sure. Let's have a look at it, Ryan. Euros, and then we can have, yeah, I see what you mean with the euros, and it definitely remains well supported. But once again, I have to say the following: this is a very critical level. We failed above it, so 150.70 is going to be key. The fact that we haven't managed to put any you know, any real resumption to, you know, this effort we had, and we're actually having a bullish day, is definitely something for somebody to pay attention to. And even if you see it from a very, very fundamental perspective of technical analysis, we have failed to register a lower low. So, for example, we had a rejection there, but did we even get a single lower low? No, we haven't. So, you know, the bullish interpretation is definitely not broken. It's still, you know, it still has to be considered, you know, the main thesis. We were looking for a move higher when we came down here. First of all, because this was a support zone, and second of all, because we had a clean ABC move. So this on its own, even if we go back, the fact that we consider this to be an ABC, you know, at an impulsive move, obviously shows that, you know, we are biased to look higher. Now, I need a break above 150.70 to confirm that, you know, one more leg is starting higher. In this case, I'm definitely going to be looking for a new high. So I think in this case that 152.20 roughly, that high is not going to hold. Okay, so the next couple of days are going to shape this. But yes, being bullish is obviously, you know, what you should do until proven otherwise, and not oppositely. Gold may be carving an inverted head and shoulders on the weekly. Okay, let's have a look at it now. Weekly chart. With the head being this, you mean? Luca, with the head being this, okay. You're confirmed. Nah, no, mate, I'm not seeing this. I mean, I don't like it. This would be a very big shoulder. I don't like it, but you know something? There is no disagreement that we have already had a very strong bullish break. It's this. It's like this triangle in a sense, okay? So I don't think we even need a head and shoulders formation, an inverted head and shoulders formation, to be bullish. I think that, you know, the confirmation of the break above this descending trend line, and more specifically the decisive break above 1300 is, I think it's very bullish on its own. The next target, as you see, is 1,375. It's this high. Obviously, a break above that is going to make it a lot more bullish as well, because then that's going to be the first time since 2011 that we will have posted a higher high on the weekly. So that's going to be a huge event. Also, as you see, this also coincides more or less with the 38.2 of the move that started, the move lower that started in 2011 and bottomed in 2015. So, you know, this area there, 1,375 to 1,380, very critical area for the long-term trend of gold. Very critical.
I think you could take another one. Chris hasn't arrived yet. He's calling in. He'll still show up on the attendees list, right?
Yes, he will.
Okay.
He needs to call the number I gave you, Dale, and then he needs to input the access code I also gave you, okay?
Right.
Okay, nice. 1 second, because oil. Yeah. Thank you for reminding me, actually. Oil was one of the things I wanted to speak about. Now that we talk about oil, let's have a look at it on the weekly, since we were already at the weekly. And, you know, this is what I'm seeing in the weekly on oil. Look at it. So look at it. We are currently at a quite critical level. Let me make it more clear. So even on the weekly, it shows that we are headed for a break. I mean, you remember, Dale, how many times we've said that. Look at oil. Oil had 3, 4, 5 consecutive weeks lower. And despite having 5 consecutive weeks lower,
Higher low. Yeah.
It didn't even manage to break below the lows of the week that moved higher before that. So actually, 5 weeks it was moving lower and still remained within the confines of the week we had 6 weeks ago. So this move, this overlapping drift lower, does it look to you like impulsive? No, it's not, right?
And you know, Steve, can you explain this to me? There was a fundamental argument, and I don't understand why, is that people felt if there was some type of hot conflict with North Korea, it would make crude skyrocket. And I have no idea why, since they're not an oil producer, why that would happen. Would you?
I can only figure out that they're just considering spillover effects. Directly, there is absolutely no reason. Directly.
Yeah. Okay, that's what I thought. Okay.
Yeah, directly, there's absolutely no reason. North Korea, South Korea, anyhow, all the neighbors of North Korea, especially in the close vicinity there, they're actually oil consumers, not oil producers. But I don't know how they're thinking about it, like indirectly, how that could affect indirectly oil demand or oil supply.
Okay, so Chris says he's in here, but I'm looking for his name.
Simon says that's interesting. About 25 of seabound crude travels in that region would disrupt the transport, I read. Okay, that's a valid point. That's a valid point.
Chris, can you raise your hand if you're in the room?
Tell me the name again.
Chris Irons.
No,
IR1S. Yeah. So
I see Patricia with
yeah. So he called in and he's here, but I don't see.
Probably he hasn't gone through the whole process then, because it needs some time.
All right. So we can keep going till I see him.
Sure. Logistics transportation, Martin says, yes, that makes sense. Oil to be traded in yuan. Yeah, that's a good point. Actually, we had that article posted as well recently. It's quite interesting. Let me see if I can find it to put it here for people to read. Let me see. I'm going to find it and post it later on my Twitter. Yeah, that was a very interesting article. Okay, so we didn't finish talking about the technicals of oil. Let's have a look at it. So today, we are back at testing, you know, the key. Actually, we're penetrating through it as we speak. So we're penetrating through the 49 level, and this, without a doubt, was an ABC move, right? If you remember, we said, Dale, that as long as we remain, you know, above, we had the ABC perfect target at 44.83. We also had the 61.8 at 45.25, and we said, as long as this general area holds, you know, I remain cautiously bullish, because I see the arguments of why this remains, you know, like a bullish setup. And I think yesterday's strength and today's penetrating through 49, especially if we close above it, confirms that. I really believe that if we close above 49, the next target is 51.50 to 52. I mean, I really believe that this time we're going to see 51.50 to 52.
Stelios has stayed bullish all the way. You think about it. It's been bullish silver and oil, and they're both working for him now.
Yes, absolutely. Nice. And since you mentioned that silver, let's have a look at it. Whoop. Okay, silver is actually also penetrating a resistance zone today. Both the 78.6 that we had and the 1775 resistance zone. So, you know, a confirmation above here, or even a little pullback. Anyhow, the whole idea here is, okay, silver did all that we expected here, so we can delete that. It worked out perfectly. So now what I'm expecting from here is, one way or another, that we're going to move to the 1850. Now the question is, will we go directly there? I'm not so sure about it. We might get something like this. Okay. As long as we confirm today's close above the resistance, I repeat. So, you know, this is also based on the fact that we managed to close above 1775. And this has definitely been a very good run for silver, because think about it, from the crash lows, which was like even below 14, we've covered within, let's see, we've covered already, like, we are like 29% higher in, what is it, 2 months? That's amazing, right?
Yep. Nice move.
Okay, so is he here?
He wrote, he can hear us. You can hear us, but we can't hear him. Do you want me to redial in?
Yeah, wait a second. We can't hear him because he's definitely beginning muted, but we need to know with what name he registered so we can unmute.
That's what I asked. What name did you register under?
Yeah.
So that's what I'm looking for. Chris, if you could hear us, what name did you register under? Write a question so I could find you.
Okay, let's have a look at any other questions, guys and girls. DXY. We had said we're going to talk about the DXY. Let's have a look at it. Okay, the DXY, one way or another, it just, you know, cannot find a bid. Every single time we mark or talk about a resistance level, the DXY tests it and fails. I mean, we haven't managed. Look at it. It has been since back then, since April. Every time we pinpoint a resistance level and we see some kind of a reaction higher, we fail at the first resistance we find. Same thing happened here. We had this 93 area, and we had said that, okay, this was a nice candlestick reversal that we got there, but we need to see a close above 93 to confirm, you know, that the DXY is actually ready to put in, you know, some kind of a big reversal. What happened? One day we penetrated above it. We reached like 193.35, and we reversed the same day and we closed below it. So we never actually managed to close below 93. Same thing happened when we were looking here for 94, etc., etc., etc. So, I mean, I can tell you one thing: we have some RSI divergence. That's the only thing going for DXY at the moment. That we have some clear RSI divergence. But on the other hand, just look at it. It remains extremely heavy. And obviously,
we've only had 2 drives. Huh? Yeah. Maybe we need one more shot down.
Perhaps, and you know something, Dale. As long as as long as we don't close above 93, I mean, what is the bullish argument here from a technical perspective? I mean, what kind of bullish argument can somebody make? Nothing, absolutely nothing. What? I mean, we are barely holding. I mean, today, if we move just a little bit lower from here, we can even close at multi-year lows, because that day here, sorry, we closed at 92.17, and we are currently trading at 92.25. So we can easily even close to multi-year lows today. I mean, it's at the lows, right?
Try the 91, 90 and a half level. It's very possible.
My next target is the 161.8 extension at 91.56. That's my next target. But you know something?
Were we already there, or we just missed it by?
No, we didn't tag it exactly.
Okay.
At that move lower, we didn't tag it exactly. We came close to it, but we didn't tag it. So, you know, unless we see a daily close above 93, there is no discussion about any bullish arguments here. Nothing. Theoretically, we can only be talking about how oversold it is, how extreme the DSI readings are, how one-sided the positioning for dollar is, which all of these are true. But, you know, so, okay, where's the technical evidence? There isn't any.
Chris, ask a question so I could find you.
If he called via phone, I'm not sure he can ask a question.
Says he's here. Oh, he can't ask a question. That's right. Okay.
Yeah.
So I think we're going to have to reschedule this.
Okay, twice in a row.
Yeah.
That's bad luck.
Okay.
Okay, do we have any other questions? Euro and gold retraced election night levels. If 10-year is to do that too, 10-year yields would fall to 185, probably DXY down to 88, 89 area. I agree with you, Luca, definitely. And speaking of that, let's have a look at the bonds.
Yeah, I'm on CVs.
Okay, bonds obviously remain very, very strong. The next target is 166.20 area for the Bund, and it's definitely bullish. And let's have a look at the Treasury as well. Treasury is also at new highs, but is also currently testing.
I got him.
You did?
Yeah, I just have to unmute and audio been sent.
Okay.
You know, Steve, there's been kind of an unusual move happening in 90-day paper where rates are going up even though the long end rates are going down. Have you ever seen that before? Like the Treasury bills are at the highest level in quite some time?
You mean in yield curve inverting? That's what we're talking about?
Yeah.
There is an old adage in economics about that. There is nothing good ever coming out of an inverted yield curve, right?
Yeah.
Usually, seeing subdued long-term rates in comparison to the short-term rates points to recessions. It's one of the strongest signals for recessions. Of course, the yield is not inverted yet, okay, so let's not exaggerate. But I'm saying that a general move towards that direction is definitely don't bring good memories in mind. And it definitely doesn't have positive interpretations for an economy. I can tell you that much.
Yeah, they're worried about short-term funding. And there used to be a thing called the TED spread where you'd buy the bills and sell the euro dollars, and as the spread widened, it was a fear, kind of a fear trade. But anyway,
speaking of the euro dollars, explain to people that you're not talking about the currency rates.
Right.
Because many people don't know what a euro dollar is. I mean, not the euro USD. Yeah.
Yeah.
Okay.
Yeah. It's a 90-day instrument that some banker came up with to float dollars in Europe.
Okay. So have a nice interview. Yes, we can hear you. Welcome.
Beautiful. Okay. Hi, Chris. Hi, Chris.
How are you?
Good. Nice to meet you. Thanks so much for your persistence.
I'm sorry that it took so long.
Oh, that's okay. You know, hurry up and wait. We all need to be patient. Don't wait.
I know. Honestly, I've never used that the format to dial in, so I think I was doing it incorrectly the first couple times. So sorry about that.
No problem. In fact, I just want to show I have your revealing my identity on your blog page. So
okay.
we share some things in common. You know, we both came from, you know, kind of a humble background, and I don't know about you, from having seen my mother's struggle to raise us, I decided, well, I'm not going to do that. I'm going to become rich. So the markets attracted me. I went to the floor in Chicago to learn the commodity business, and you went a little different route. So why don't you tell our community a little bit about, and I do remember your first story is that after high school you had some money to invest and you wanted to put it all in Apple, but your broker talked you into buying 2 other issues instead of it all being in Apple. I'm sure he told you that it was smart to diversify, but I'm wondering if his agenda wasn't just to generate more commissions, at least more ticket charges for doing 3 trades instead of 1. Is that what you discovered? You with me? Chris?
Hello, can you hear me?
Yeah.
Dale, I'm sorry. Yeah, I just disconnected by accident and just dialed back in. You know what happened when I tried to connect the first time? It prompted me with a different number to dial in on, because I guess if you're going to be speaking, they want you to dial into a line that probably has a little bit more bandwidth.
Okay.
Since it's going online, I can actually hear you much better now than the dial in I was using before. So I think we're okay now.
Well, I just told you a story about after high school, you went into a broker to buy Apple, and he talked you into buying three stocks instead of all Apple, and probably said, yeah, well, it's better to diversify, and it was probably because he would do more commissions doing 3 trades instead of 1.
Yeah, and also I think, you know, the Qs had just started trading, so ETFs, you know, in like 2001 were really just getting started. I mean, now there's ETFs. If some guy like eats a bagel in Belgium somewhere, you know, there's an ETF for that. But back then, you know, the Qs were kind of like, they were one of the very, very first ones. And so I imagine somebody somewhere up the food chain at AG Edwards was probably pushing them to get it sold as well. And so, yeah, I went into his office. I said, you know, look, I've been into Apples my whole life. You know, I said, I know the company's doing horribly. Microsoft had just taken a 7% stake in the company to basically bail it out. And Steve Jobs had just come back to the company. So this was before, like, you know, really before anything that before OS 10, before, you know, they had just launched this thing called iTools, which was like a very, very primitive version of all the iCloud software that they have now that they, you know, and the whole media suite that they based their operating system on, and really, which was like the next operating system, which was the place that Steve Jobs went when he left Apple before he came back. None of that stuff had happened yet. And when he came back to the company, I was just so jazzed about it. And, you know, of course, I'm like 18 years old. I walked in there with, I think, $1,700 in cash, you know, and plunked it down on the secretary's desk and said, you know, I want to buy some stock. And the woman's like, you know, you got to go get a check. You can't just walk in here with $1,700 in cash. So I was like, okay.
Yeah,
so I went
they thought you were money laundering into Apple.
Yeah, exactly, right, at 18 years old in suburban New Jersey.
Yeah.
So, so this guy, I mean, he looked just like you would expect an A.G. Edwards broker in his mid-40s in New Jersey to look like. And I said, I want to buy $1,700 worth of Apple. And he was like, no, you don't. He's like, you know, Apple's garbage. He's like, you want to diversify. So I wound up buying Sun Microsystems, which, you know, Java was just kind of in its infancy at that time. And I was buying, what else did I buy? I bought Palm, which of course went to Bureau or something close to it. And I bought some Motorola because they were actually manufacturing Apple's chips at the time. So I thought maybe I could kind of get an end around on this guy, but yeah, it was a great learning experience to trust my own instincts and not listen to anybody else.
Yeah, so good. Your first experience, you had to become self-directed. So what did you do after? What did you do after that?
Well, to be honest, I just started. You know, I was in school at the time, so I went to university, and you know, I really didn't have a lot of money while I was going through university. So what little money I could scrape together, I was working usually 1 or 2 jobs at all times between the time I was 18 to now, and I would scrape together a little bit, you know, $1,000 here and there to just mess around with. And, you know, instead of just saving the money and putting it into stocks and leaving them be, I started to experiment with everything, really, options and, you know, futures. And it was an interesting time because everything was kind of shifting online. You know, back in 2000, 2001, there were still open outcry pits. And so, you know, the whole transition to digital hadn't happened yet. And so, you know, I basically just lost money for years. I played around and, you know, learned about options the hard way, learned about Forex the hard way, learned about futures the hard way, learned about, you know, equity valuation and all of the things that you need to have an understanding of how to be in the markets. I'm still learning to this day. But I learned a lot of lessons the hard way, and I lost at the time what was, you know, a significant amount of money for me. You know, seeing as how I was just bartending and, you know, just scraping by. And eventually, you know, as I continued to do that, I started to wise up a little bit. You know, maybe 10 years ago or 8 years ago, I really started to, you know, get a little bit more of a grasp and an understanding, because I went to school as an English major, and, you know, I have a master's in organizational leadership, which, you know, has a financial element to it, but I never went through any type of intensive financial education. So I had to learn everything on my own. I learned equity valuation. I learned, you know, how to do discounted cash flow. I learned how to read financial statements. And then, you know, probably like 5 or 6 years ago, I went to go work for a small company that's now, you know, basically defunct. But I was working investor relations for this little startup company that was listed on the over-the-counter markets. So that experience gave me a lot of time sitting with the CFO and sitting with the securities attorney, writing a lot of filings, you know, going through the annual reports, page by page, line by line, word by word. And that was a pretty intensive experience that was very helpful in getting me to have a much clearer grasp of public reporting and what companies are expected to report. And so really, you know, it was a combination of learning the hard way and you know, kind of getting into the inner workings of a company that was doing some public reporting, which helped out. But you know, and then eventually over the last year or two, you know, I did some courses at Penn in finance. I'm really trying to round out the financial angle of my education, which is probably, I would say, one of the weaker parts of my background right now. I've always been a pretty good investigatory journalist. I've always been a good writer. I've always kind of been able to sniff out bullshit pretty well. But the financial end of things and the forensic end of things financially is really what I'm working on developing now. So
okay,
it's been a long string.
You tried almost everything. You said options, futures, Forex. What do you do now? What did you gravitate to after having all those experiences? Do you trade? Do you advise? Are you mainly an equity guy now because of your experience of being an investor relations person? What's your focus now?
Well, for the most part, I focus on equities and options now. But it's nice having the tools and having the wherewithal to understand the futures market, understand the currency market, because, at some point, you're handed opportunities, whether they come, at 7 o'clock on a Sunday when the stock market isn't open, or if it's, if you want to get a pure play on crude or something, as opposed to, buying and selling a company that deals with crude oil, or you want to get direct exposure to gold, which is probably, one of the futures that I trade probably the most often. If you want direct exposure to that, instead of going out and buying, GLD or one of these other instruments that's listed on one of the equity markets, it's nice to have that accessibility. But I mean, as I was saying about ETFs earlier, there's pretty much a way to play just about anything on the equity markets right now. You're just constrained by the time that the market's open. So the futures market and the currency market can give you the action when the equity markets are closed sometimes.
Okay. So tell me about QTR. Why Raven? Why is the Raven your animal spirit?
That's a good question. I don't think anybody's actually ever asked me that, and it's really not a good story at all. As much as I'd love to have some great explanation behind it, it was 2012 or 2011. I decided that I wanted to write for Seeking Alpha, which basically I was just starting to do just to get some beer money on the side. It turned out to be an unbelievably powerful platform for getting my name out there, and especially for helping me learn. I mean, I read so much stuff on that platform as I was writing on it, but I wanted to sign up under a pseudonym because I was working at the time and I didn't want to use my regular name. So it wasn't like I adopted the pseudonym because I was, I knew I was going to be going into short selling and I didn't want my name associated with my work. It was literally because I wanted to be able to write freelance without, the people at my job or, the shareholders that I corresponded with at my job to know that I was out there doing some freelance work on the side. So, I was an English major in college, and that Edgar Allan Poe poem, Quote the Raven, or actually the poem Quote the Raven, was in my head for some reason at the time. And, actually I signed up with Seeking Alpha over the phone. You do it online now, but I think back in the day, somebody had called me and said, we want to get you set up with an account. What pseudonym do you want to use? And I was like, I have no idea. So I said, use Quote the Raven. And then that was it. I expected it to be nothing. I expected it to be this thing that I wrote under for a little while, and then I would keep going wherever else I was going. But instead, it kind of turned into, this name. And now people send me stuff with ravens on it, and my mother for Christmas bought me a notepad with a raven on it, and so I've just kind of adopted it because. Yeah. That's what a lot of people know me as.
You're kind of like the Edgar Allan Poe of Twitter now.
Oh, I don't know if I'm that eloquent, but that's a compliment I'll graciously accept.
All right. So you've been around the block. You've been doing this for a while. What's the landscape look like to you, Chris, with the market pressing record highs and all this geo stuff and all this domestic political stuff and the Fed, will they or won't they? What are you telling your readers about the environment that we're in right now and how they should, protect themselves or take advantage of things?
Well, I'm always of the, I come pretty much from the Austrian mindset. And so, Keynesian theory, maybe I'm just not well educated enough on it, but it sure as hell doesn't seem to make a lot of sense to me. And so I'm kind of always of the mindset that, owning things like gold and silver are, it's not a bad idea. I'm kind of anti-Fed policy. It doesn't really seem to make a lot of sense to me. I was raised in a household where I was taught to save my money, and I was given a young savers passbook that they give, the teenagers. You can go in, deposit your $20 and see how much interest you're making on it. And it used to be now you can check it online. It used to be like a physical register. And my mother is, very fiscally conservative, and my parents had, two, I guess middle-class jobs. My mom worked at a library. My dad worked as a.
So you're probably, let me guess, you're probably worried about elevated levels of equity prices.
Oh my God, yeah, absolutely. The point I was trying to get to though was, because of my parents' frugality and because of my mother's financial acumen and her, her Austrian mindset with our personal balance sheet. I was able to be raised in a household where we always had food on the table. We always had a vehicle to get around with. We were able to move from a smaller house to a moderate-sized house at one point during my upbringing, and my parents, have done that just through the basics, which is not overextending yourself with too much debt, not taking on obligations that you can't handle, finding prosperity in saving money. And so that's kind of how I was raised. That's why it's easy for me to adopt the Austrian mindset, and that's why really nothing that the Federal Reserve does makes any sense to me.
Isn't it? Completely out of fashion.
What's that?
The Austrian mindset. Now it's use as much leverage as possible, take as much risk as possible.
It's ridiculous.
Okay.
I mean, equity prices are so expensive right now. I mean, the thought of the fact that we are 10 years into a cycle where the Federal Reserve has made money so cheap that every company that you pull up, whether it's Coca-Cola or it's Microsoft or, God forbid, it's one of these specialty pharmaceutical companies, basically every company you pull up, is going to have a fair amount of debt. Many companies are starting to get into territory where their leverage ratios are starting to come up a little bit more, and they're taking this cheap money and they're buying back their stock with it. And, that creates a problem down the line at some point.
What do you think? What do you think could be the catalyst or the pin that pops a bubble? What do you see out there that worries you?
What worries me is the fact that the central banks are going to try as hard as possible to stop any bubble from bursting. I don't know what it's going to be. I don't know if it'll be, it could be anything. It could be this North Korean thing. It could be student debt. It could be, it could be household, credit card debt. There's a bunch of bubbles out there. What worries me the most is that, the central banks are going to try and do everything possible to prevent any type of bubble from bursting. And we've seen over the last 20 years, we've really gone from markets that had been allowed to correct here and there to, what we've seen here over the last 10 years with, Brexit happens and all of a sudden the market, is back up. When Trump is elected and all of a sudden the market's back up. So what's frightening to me is the idea of a currency crisis, which gets laughed about a lot if you bring it up at a table full of suits on Wall Street.
Okay, a currency crisis in the euro or in the U.S. dollar?
In the dollar.
Okay. Okay, so maybe losing the reserve currency status, petrodollar, etc.
Yes and no. I mean, I know it's unlikely, but it just ideologically doesn't make a lot of sense to me. And maybe I just haven't bought into the system enough, and maybe I'm too much of an outsider. But to me, growing up, my mother would always say, if it doesn't make sense, it's probably not true. And, depegging the currency from any type of resource, we used to have the dollar was tied to gold, and so the dollar became the reserve currency because it was backed by gold, and then all of a sudden we depegged it from gold, and we're still the reserve currency. Why? Well, that's a great question. At that point, it becomes somewhat of a confidence game, right? And we're a country that's $20 trillion in debt right now, and the only way that we can continue to service our debt as a nation is by essentially, the dollar depreciating and the dollar losing purchasing power. Otherwise, we would have a real problem even servicing the debt, let alone paying it off. And so, it's how far can we push this Keynesian bubble out? It's been
you never know how far a rubber band can stretch, do you? You have your head wrapped up. Can you wrap your head around crypto?
Yeah, I've actually I've looked at them a little bit. I own a little bit of Bitcoin. I can see the case for and against them, and I haven't really. I think what's going to happen is I think they will appreciate in price, just from a supply and demand standpoint. The one thing that I like about, Bitcoin, for instance, is that the Federal Reserve can't come in and print more of it. So you have some Bitcoin that, will be on issue, and then that will be it. The supply side of the equation is pretty much locked in. And it doesn't really matter whether it's Bitcoin or whether it's tulips or whether it's an equity or whether it's, cans of tomato sauce at your local grocery store. If the supply ends somewhere, and that starts to kind of create this narrative of get it now while you can before the price continues to appreciate, that can be a pretty powerful thing. So people that speculate on Bitcoin, I find, either saying it's going to go to zero or it's going to go to $500,000 or whatever. I find both of those things fascinating because it's pretty much impossible to really try and put a finger on how high it will go or how low it will go. I don't see it going away anytime soon, but with that, it's extremely volatile, and I own a little bit, just basically as a lottery ticket.
Yeah, because if you use it at the grocery store, if you went from one aisle to the next, in 5 minutes, you wouldn't know if you had enough to buy things. So,
exactly.
Or you could buy a lot more.
It's ridiculously volatile for a currency.
Yeah. So let me ask you this. I did notice at the bottom of your page that you're on Ackman's side, that Herbalife is a Ponzi scheme. I don't want to get into Herbalife, but do you think all network marketing?
You're talking to the wrong person then.
No. Well, I just want to ask you if you think all network marketing is a Ponzi scheme.
Yeah, it's actually, people kind of convolute Ponzi scheme with pyramid scheme. They're both, types of financial fraud. They're a little bit different in nature, but similar in some regards. For the most part, I do. I think the multi-level marketing model is a disingenuous way to do business that preys on people that don't have any type of, financial sophistication to understand the intricacies of how their business model works. I've met with, over the last 4 or 5 years, many people who have been involved with many different multi-level marketing companies. They exist, as far on the gray line as you can get of being a legal business model without crossing it, I guess. If the FTC didn't want to come out and use the word pyramid scheme, but they sure said a lot of horrible things about the company in their complaint about it. And anytime you can have a company that rips 80% margins and generates a lot of cash, has fantastic quality of earnings and is able to, rip those huge margins, you have one of two things going on. They either have an unbelievable moat and an amazing product that nobody else has been able to, come up with, and you have a great, beautiful organic business that has, just basically found the mother lode somewhere with whatever product or service they're offering, or you have like these network marketing companies, which are companies that offer products that are, for the most part, commodity products that you can get basically anywhere else. I mean, you can get equivalents of Herbalife's products for cheaper at GNC and other places. And then the question becomes, well, how do they rip these huge margins? How does a company like that that's selling a product for a premium to what it's selling for at a place like GNC wind up making 80% margins? And the answers lie in how the business model is structured. And the closer you get to running a fraud, the easier it is to make amazing margins. I could make 100% margins if I tell you I'm going to get you a Ferrari for $50,000 and you give it to me and I just don't return a product or service to you. I mean, that looks great if you're looking at the operating margin line on my personal balance sheet, but unfortunately when I fail to deliver the product to you, you start to realize that maybe those margins are that high for a reason.
I tell you, you are a voice in the wilderness for a lot of people. Really glad I reached out to you, Chris, and you know, you bring sanity to a world that's so full of sharks and barracudas and misinformation and hype that, you know, I think just for balance, people should follow your writings, and your Twitter handle is at QTR Research, which and that's also your website. Is it www or it's a blog or what? What's the best?
It's
quotetheravenresearch.com, and I also write for a company called Geo Investing, which does a lot of like similarly like-minded boutique style research. What we call it basically hedge fund quality research for the retail investor. We're trying to just do the same thing, which is inform people that are maybe on the retail side and kind of pull the curtain back a little bit for them and give them access to some high quality research on companies that either may not be covered on Wall Street or may not be covered in what we believe to be an objective fashion. And so, yeah, my Twitter handle is at QTR Research, and then you can also follow at Geo Investing. It's GeoInvesting. And yeah, it's great talking to you. I hope I can come back on sometime and we can do this shit again.
Yeah, where are you at? I'm showing your picture. Where are you? In Europe? Where is that?
Oh, on that website. That's in Italy. That's in Florence, actually, at Ponte Vecchio.
Okay, were you on your way to talk to Mario Draghi about what he's doing?
No, I was on my way to a bar.
I thought either the Pope or Draghi you were there, but yeah, you like bars, so maybe one day we'll have a chance to raise a glass together, Chris.
That would be nice, man. That would be nice.
All right, great meeting you, Chris. Thank you for your time today, buddy. And
thank you so much, Dale.
And thank you for educating the people that may be a little bit on the naive side, so they don't fall into the same traps and landmines you and I have stepped on.
Thank you so much again. We'll talk soon.
Okay, Chris.
All right, bye-bye.
Everybody. If you're still here, Steve, I want to test your mic before I say goodbye to everyone. So let me get you up here, Steve, so that next time you're good. Everyone, Steve Walker's here. We had some technical issues yesterday. There he is. So I'm just going to make you a panelist, Steve, and that way you could test the mic and see if it works, because you're coming back on the 18th. Try it.
Hello,
I hear
Dale.
something.
Yeah,
I hear you. I hear you,
okay.
Steve.
Okay, good. Good.
Okay,
It was unfortunate yesterday. Yeah, I don't know what happened with the PC, but that one is better.
Okay. Well, then we look forward to speaking to you in a few weeks. All right, buddy? And Faith, thank you for your attention today. You're welcome, Mike. Thank you, Blake and Steve, and we'll see what's going on. Maybe Nick or Grega might drop in the next couple days. So good luck on your trades, and don't forget to sign up and take a subscription. And down the road, Blake's going to be opening that up. And come back Friday, we'll announce the winner of who guessed the closing price of the euro. We'll either do that Friday or Monday for your T-shirts. And most of all, don't just count your pips, count your blessings. And see everyone mañana. Thank you. Thank you, my trading warrior brothers and sisters. And Steve, nice to hear your voice. Look forward to talking to you in a few weeks.
Okay, thank you.
All right, Steve.
Bye-bye.
Bye-bye. And thank you, Chris, if you're still here. If not, everyone be worth following Chris Irons. See everyone tomorrow.